Tesla enjoys a nice 3-day rule run starting yesterday, and we think it lasts for another 3 or 4 days at least. This is Greg for Teslafaninsight. Thanks once again for joining us. If this is your first time, welcome. If you're a repeat visitor, welcome back. We also want to thank our Patreon supporters and our subscribers. If you enjoy the show, please take time to like and subscribe. I would also like to note that this is a copyrighted show, and you're not authorized to use any of the material in the show without permission. So the larger channels that are copying my material and then rebroadcasting as their own is not appreciated as copyright strike, and you could lose your channel. So please stop doing it. So one of the ideas that we came up with was the investment 3-day rule. As we know, what the 3-day rule is about is that 3 days after any major company event, in particular earnings, announcement of production or new vehicles, there are a large number of things that fit that profile. It usually takes analysts that analyze the company, both internal to the big money managers and external to those managers, a while to determine the impact this is going to have both on revenue, profit, short and long term. So all of those have to be figured out. And this whole process takes about 3 days before we start seeing the results. The earnings announcement for Tesla was on Monday night. So Thursday is when we saw the first big move, 34 points up. And now we're starting to see it move again up as the market is not sort of crashing and make it difficult for Tesla to actually work. So I wanted to kind of go through this today because what started to happen for Tesla again is that we're in our usual position where Elon and the company save very little between earnings announcement. And so anytime earnings show up, you now have all this information that has to be sort of boiled down and look at how it's going to affect the company short and long term. And something like the huge beat that Tesla just had requires a lot of research. And it's interesting to watch some of how the money managers behave. So there are different types of money managers. The hedge funds or individuals can move immediately, positive or negative based on what the stock does. And we kind of saw that in the first couple of days. It was generally negative because there were certain blowout elements that were not impressive for the hedge fund managers. But now we're starting to see what the large institutional managers are saying in terms of their appreciation of what's going on. At least 60% of Tesla stock is held by large institutions, which is typical for large growth stocks of this sort. But the feeling is that number is a little bit higher now because Tesla is 20% owned by Elon and his friends. And then you look at what's left for the institutions. So our percentage of institutional ownership is actually very large. So therefore, their opinion on the stock and where it's going is pretty important in terms of getting a good sense of where things will go. And we're now starting to see that. Now, today is Friday, which is a really amazing day. Prior to coming on the show, I had seen that Tesla was above 680. 682 to be exact, which is really impressive in a fairly down market. But also it's impressive because certain entities have developed a really strong process to freeze Tesla stock at low numbers, particularly on Fridays. In fact, today I stated that I wouldn't be surprised if they were able to pull it back down below 650 because there are a large number of calls starting at 650 all the way to 700 that end up worthless. But the way things are going is that there's so much money being moved into the stock based on the announcement that it was, it looks like a wall of money can overwhelm excellent technique and not as much money, which looks like the conclusion that'll arrive today. Now, as I was thinking this through, I was getting notes from people both in Patreon and on my main channel regarding, what's going to happen with the 100 points up? Will it occur, et cetera, that I was expecting or we should see, given how strong Tesla's numbers were. The way I came up with this sort of 100-point target for the rise is percentages. So if you look at a company like Tesla and you're saying Now, wait a second, you beat earnings by, let's say, 30%, and you beat the revenue target by, let's say, 20%. Those aren't exact numbers, but you get my drift that the problem that everybody's having that manages, I want to say, guide by wire, the large managers really don't, there's a little bit of gut feel there, but there's a lot bit of simply what's the growth rate of earnings, what's the growth rate of revenue, is that number good right now, and is it sustainable over time? And if it is, we have to give you, if you're consistent, all of that as your valuation. So in our minds, there's at least from where Tesla was in the 650 range, that number is about 20% below where it should be based on Tesla's current statistics. And so you can kind of do the math on that one in terms of how many points that is. And so that's why we came up with the at least 100 point up is the expectation over the next week. But frankly, it could go higher than that if there's market support for what's going on. So, I'd say stay tuned, because today is a brutal day where there are large managers, the hedge funds on one side, maybe some institutions, and then a lot of institutions on the other side that are buying, because they not only have to push against a somewhat down market, but they're actually pushing against a lot of hedge funds who are trying to make money because they've sold covered calls, etc. And so there's a huge battle that's going on. The stock, therefore, should stay below 700 today, but it's a possibility that it could push above 700, and if it does, it'll do strongly so heading for the 720s or even 730s. No way, I don't think it gets to 750, but that's a possibility. The next consideration here is something called a short squeeze. So what's happened is that Tesla's stock price is actually shorted by a lot of folks. And a lot of folks, it could be smaller in number, but larger in amount. What we're facing right now is the fact that it's entirely possible that we see kind of a short squeeze that occurs. And there are some short squeezes that differ. The usual short squeeze is the stock jumps 50 to 100 points, maybe 60 points. And then all of a sudden, all the people who have to get out of the stock buy the shares they need, then the price kind of tails down from that position. That's a typical scenario. So maybe half the gain disappears in the retreat after the short squeeze is over. There's a whole bunch of different flavors of short squeezes. It's my belief that the short squeeze we're in right now, and hopefully we enter, is a process where there are these large institutions that need to acquire shares. Once it's been approved that they buy, they hand their purchase decisions to the trading desk, and the trading desk then follows through to go out and purchase the shares necessary to fulfill the orders that have been placed by that institution. So the trade desk has a choice. They can A, try to buy quickly and get filled up, or B, they can wait a couple of weeks and hopefully the froth that comes from the start buying by the institutions will slow down and they can get a better price. But there's also the possibility that if they waited too long to get in, they end up in a bad situation because the price will bounce up and then all of a sudden it doesn't pull back as it usually does because the numbers were so strong. And I really think that's the situation we're in currently, is that the hedge funds managers, if the stock starts to run, are in a tough position because there's a lot of institutions that have to accumulate. And if they choose to accumulate at the wrong time, there are a lot of firms that are shorts that could get wiped out in that process, because the buying frenzy that's occurring could involve both hedge funds trying to close out positions and institutions that need to build their position based on the statistics that Tesla presented. I will also say that I'm a bit surprised at what we're seeing right now, because there was some suggestions during the earnings call of the fact that the numbers were terrific, the guidance is terrific, which are the two components of determining where the stock price goes. But the problem that popped up is that there were some questions about the FSD and how long it's going to take and will it be ready. And then there was also, still the nagging questions about how do we handle the EV tax credits in the process were still out there. But I would say that the percentage of, I want to say, questioning the number institutions is in that 20 to 30% zone. And the percentage of people that are like, hey, we're an institution, we're looking for good buys when it comes to big cap growth, technology growth. There are all these funds that Tesla hits that are places that people want to invest, and therefore it's rising. Another sort of interesting data point that popped up is, please take a look at NIO falling 30% in the last month, I believe. This is a very sort of interesting deal here because obviously NIO competes with Tesla, particularly in China, but also increasingly around the world. And what's popped up with NIO is the fact that the Chinese government is in the process of a clampdown, and the factory Tesla is building in Shanghai should have actually gone to NIO. The Chinese government chose to place their production with another sort of state auto company and allow Tesla to build there. And so the stock price is actually down, in my mind, because all of the Chinese stocks are down as the Chinese government is doing let's figure out how we're going to handle the very rich people that we've helped facilitate that are now exhibiting bad behavior. And so NIO's stock is getting smashed in this process. So I wanted to review all this because my overall thesis is that we're in the 3-day rule right now. How long will it last? Probably 4 or 5 business days as we see how this plays out. What should happen? Well, we should end up with establishing a new base for the stock somewhere in the 685 to 720 zone, I think is what the numbers are. And then from there, I really think that further digesting of the numbers should result in the stock price pushing higher. But it's really dependent on, does the market choose to start dropping again, taking everybody, including Tesla, with them. So exciting times. Congratulations to those of you who are long-term Tesla bulls and holders. This is the time to rejoice and get in and hold on, and hopefully maybe pick up some calls long-term to make some money off of what's going on. And we look forward to supporting your knowledge gain in this space. I also wanted to again remind you we have a few SpaceX shares if there's interest. We also want to encourage you to like and subscribe. We also want to encourage you to consider some health tips. I've been learning a little bit about biking every day, so I'm trying that as an option to go with core training. A couple of suggestions that I would make. Also want to encourage you, prior to lovemaking, don't forget no more than a salad to allow the food to digest prior to lovemaking, and therefore you end up sort of feeling better overall. Any rate, this is Greg for Teslafaninsight. Tschüss German, au revoir French, Lehitro Hebrew, Choda Hafez Farsi Strazice, Russian, Ni Hao Ma, Chinese Kambawa, Japanese, Heido Swedish, Namaste Hindi, and in Jamaica we say Walk Goodman. Thanks and have a great day.